Stocks closed mixed on Wall Street. The Nasdaq gains, but the Dow Jones Index breaks a three-day winning streak, while the S&P 500 also ends lower. The 10-year Treasury yield surges to the highest level since late July. Asian markets have opened lower following mixed cues from Wall Street. The GIFT Nifty is also suggesting a subdued start for the Indian markets. Brent crude rises above $74 a barrel on hopes of increased demand after China cuts its prime lending rate by 25 basis points. Gold continues to consolidate around record highs. Shares of Hyundai Motor India will debut on the exchanges today after a 27,870 crore rupee IPO, India's largest till date. The IPO was subscribed 2.37 times and the grey market premium is reflecting a positive debut for the company today. And in key earnings to track, Bajaj Finance may see net interest margin decline year over year, while provisions too may rise. Also watch out for numbers from Paytm and Zomato. It's an earnings-heavy day today, and we are here to bring you all the action on Power Breakfast here on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are doing, though, and it's a screen of red across the Asia Pacific. It's a start under pressure for most of the benchmark indices there. The Hang Seng, though, is trading with gains of around 0.5%. The Taiwanese index is down 0.5%, but the losses are coming from the Japanese markets. The Nikkei is down over 1.5%. The South Korean indices, too, are trading with losses in today's session. The Chinese markets, though, are trading absolutely flat, but the cues that are coming in is that the Japanese markets are leading the losses. The South Korean indices are down 1%. The broader markets in South Korea are down 2%. So it's a negative start for the Asian markets by and large. And pull up the GIFT Nifty as well, and that will give you an indication of how our own markets are likely to start off. Absolutely flat. After the extremely choppy session that we saw in yesterday's trade, the implied open is suggesting an absolutely flat start for our own markets as well. But moving to Wall Street then, where the benchmark indices had a mixed day. The Dow Jones ended 350 points lower, snapping a three-day winning streak because Treasury yields over there were on the rise. The S&P 500 also ended below the flat line. However, the outperformer was the Nasdaq, and that was because of Nvidia hitting a record high in yesterday's trading session. Key earnings like Tesla, Coca-Cola, General Motors are also awaited later this week. CNBC's Angelica Pebbles gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indexes Monday as Wall Street hits the pause button on the recent rally. The Dow down 344 points, the S&P 500 down 11 points, and the tech-heavy Nasdaq up 50 points. Disney is pushing back the date to name a successor for longtime leader Bob Iger. It now says it will plan to name its new CEO in early 2026. Sources familiar with the matter tell CNBC it will give the board more time to vet candidates. Former Morgan Stanley CEO James Gorman was just named its new chairman, and he will lead the company's succession planning committee. Disney shareholders are eager to see this succession plan stick. The board ousted Iger's hand-picked replacement, Bob Chapek, in 2022. His turbulent tenure lasted only 3 years and resulted in Iger returning to the CEO job. Shares of Kenvue, the Johnson & Johnson spinoff that makes products like Tylenol, Listerine, and Band-Aids, surging today on reports that activist investor Starboard Value has taken a large stake in the company. People familiar with the investment tell CNBC it is looking for the company to improve its share price. J&J spun off Kenvue last year, but still holds a stake in the company. That's what's happening here in the U.S. Back to you in Mumbai.
Now, as the market continues to oscillate between a possible recession and strong optimism in the U.S., Seth Carpenter of Morgan Stanley and Nathan Sheets of Citi believe that the economy is in solid shape.
No, I mean, I think sentiment has been swinging around a lot, right? We got the big market turmoil in August when people thought maybe we were going into recession. That's clearly in the rearview mirror. But if you listen to my colleague Mike Wilson, our equity strategist, he will tell you consistently that valuations are a bit stretched. And so I think always we get these times where people take an opportunity, take a breath, and ask themselves, where are we? And sentiment, I think, can play a role in causing people to reassess things. Fundamentally, though, I do think for the real side of the economy, we're in pretty good shape right now.
This is a dynamo U.S. economy, particularly the consumer is very robust and supported by favorable income and balance sheet effects. And the economy is not showing any signs of slowing at this stage. I'm not willing yet to embrace reacceleration. I'm not sure that's where we're headed. Frankly, I'm not sure the Fed will allow the economy to reaccelerate at this stage. But one certainly has to be very encouraged by the data, and soft landing scenarios are looking more likely than they did, say, a couple of months ago.
Well, that's all we have on the global market front, but how will all of these overnight cues impact our own markets? Our research team joins in with how the trade setup looks like and the stocks that you need to keep an eye out for this morning. First up, Vivek will tell us all the market cues that you need to watch out for. Vivek, good morning. After that session yesterday with some really extreme earnings reactions, what's the setup looking like today?
Well, good morning. You're absolutely right. The kind of earnings reactions we saw, even amongst the large cap names was quite extreme yesterday. Going into trade today, like we just mentioned at the start of the show, it's been a subdued handover as far as Wall Street is concerned. The other worry as far as the Indian markets are concerned is the fact that crude oil prices, after almost an 8% fall last week, yesterday bounced back by close to 2%. So Brent futures now hovering a little over the $74 a barrel mark. Now, talking about the Indian markets yesterday, along with this very sharp earnings reaction, what did you actually see? Opening gains, but markets failed to hold on to the opening gains. The broader end of the market saw significant underperformance. So advanced decline ratio was skewed largely and very strongly in favor of the declines. The other important problem was that there was significant divergence as far as the Nifty bank constituents was concerned. While at one end, HDFC Bank did quite well, Kotak Mahindra Bank, RBL Bank dragged the index, significantly lower on the back of very weak earnings and very sharp reactions negatively to the kind of earnings that they did. Another important rebound yesterday was as far as Bajaj Auto was concerned. The management came on CNBC TV 18. They went ahead and clarified as far as festive demand was concerned, and a very sharp intraday rebound is what you saw. What is the key event to watch out for today? Well, Hyundai Motors listing is there today. Watch out for the kind of listing that particular company has on D Street, and along with that, any impact as far as the auto space and the auto sector is concerned will be very important to watch out for today. Earnings reactions that we were expecting, City Union Bank, Client DLM, and all of them will react. Along with that, key earnings today, Bajaj Finance, Amber Enterprises. Remember, yesterday was a very sharp mover yesterday ahead of the earnings. Coforge, Asian markets, GIFT Nifty, all of them indicating a subdued start for our own markets.
Earnings heavy day, as I just mentioned at the start of the show. Vivek, thanks a lot for that. Over to Vinny now, who would list out all the stocks that you need to watch out for today. Vinny, good morning. All eyes will be on Hyundai, but what's on your list?
Absolutely, all eyes are going to be on Hyundai, but I'm going to talk about some of the other earnings that are going to be in focus that were reported post-market hours. Bajaj Housing Finance, a decent set of numbers that's come in from the company, quite stable. NII up by almost around 12.95% on a year-on-year basis. Quarter-on-quarter basis also we are seeing an improvement. Profits seeing an improvement of around 20.9% on a year-on-year basis. NIMs 4.1% versus 4.4% YOY, while GNPA is remained quite stable, largely stable on a quarter-on-quarter basis, so keeping an eye on that. Also, we have 361 WAM, which is going to be in focus. Missed the estimates of the street. Revenue was down by 2%, mainly impacted by transaction and broking income, which was down 15%, while recurring revenue also saw a bit of a decline. So there was some bit of a pressure in terms of revenue. Profits very muted at 1% growth on a sequential basis. Signed DLM in line set of numbers largely, but profit was something that we saw a miss in. Profits was just up by 5%. Estimates were much higher. Revenue saw an increase of 33%. Margins, that's where the stability comes in. 8.12%, I beg your pardon, versus 8% on a quarter-on-quarter basis. Moving on, we also have Nelco, which is in focus. Now, profits of the company saw a decline of around 28%. Revenue saw a growth of 7.7%, but margins, that's where the pressure came in. So operationally, a weak performance from Nelco. Jana Small Finance Bank, NII seeing an improvement, profits seeing an improvement, but GNPA, that's why we're keeping an eye out on, because some bit of a deterioration seems like that's coming from the GNPA front. Lemon Tree is in focus on the back of the company signing an lease agreement for 72 rooms in Karnataka, and Eicher Motors, as Royal Enfield has started operations in Bangladesh with the inauguration of its flagship showroom, so keeping an eye out on that.
Vinny, thanks a lot for that update. And finally, Sudarshan joins in with cues from the F&O space. Sudarshan, we are back to those levels on the lower end of the range. What's the setup on the F&O cues looking like?
Morning, Hormaz, that's correct. So if you talk about yesterday's trade, if you talk about the Sensex, on the level of Sensex and Nifty, it was not a major fall. The severity of fall, if you want to see, it was a mid-cap, where mid-cap index saw a fall of more than 1,000 points. And for today also, after like weak global cues or like subdued global cues, GIFT Nifty is indicating a start with minor gains. Talking about institutional flows, we continue to see FIs selling. FIs have sold more than rupees 2,000 crore, while DIs have bought more than rupees 3,000 crore. But if you talk about the month of October, till now, FIs have sold more than rupees 82,000 crore. That is the highest for this month. Like for 1 month, that is going to be the highest FI selling that we have ever seen. And this is consecutively for 16 sessions. Talking about the index futures, here also FIs have sold more than rupees 300 crore, and they have cut long positions by almost 3,400 contracts. At the same time, they have added contracts of more than 2,300, and with this, long exposure now stands at 33%. On the client side, we continue to see addition of long contracts. Net long contracts now stands at 2.3 lakhs, with exposure stands at 64%. On the options front, on the call side, 25,000, 24,200 call options were active, and on the put side, 24,700 put was active, where we saw addition of almost 14 lakh shares with premium 162. And with this, important levels for Nifty, support is seen somewhere around 24,700 and resistance 24,950 to 25,000. Stocks in focus, the stocks which are new in the band are India Mart, Manappuram, Piramal Enterprises, RBL Bank, and stocks which are out of band are Nalco and Tata Chemicals. So keep an eye on these stocks.
Sudarshan, thanks a lot for that FNO update as well. Plenty of stocks in and out of the FNO band, so keep an eye out on all of them. Time for a short break. Up next, we drive down to take a look into the journey of Hyundai Motors, the mega Dalal Street debut that everyone will be watching out for today. Stay tuned. Back on the other side. Welcome back. Now, the Indian markets have seen a spate of FII selling, as Sudarshan was just highlighting this month, who have withdrawn over $10 billion from India in the month of October alone. And this month has now on track to see record monthly FII sell numbers. Now, my colleague Prashant got in touch with Manish Chokhani to discuss the impact of this selling, the slowdown in the consumption space, the effect of India's K-shaped recovery, and a lot more. Listen into excerpts of that conversation.
A bit like 2008, except the base is very different. Much larger. We're 3.5 times of that time. And also the fact that there's a lot of domestic money, otherwise this would have been a deeper correction. Yeah. But having said that, foreigners own 15-16% of India. So it's about $800 billion at least of stock which they have. So they've sold 10 billion. It's like poor chaps have traded 1% of what they hold. We shouldn't be grudging them that. In the context, in the last 6 months alone, we've raised $30 billion in our markets, of which 15 has come from companies raising it for building new capacities or whatever. Right. But 15 has actually been promoter and private equity selling. So if this sort of selling can get absorbed, it creates confidence that this is actually a two-way street. I'm not trapped like I'm in China or in Africa. The expansionist tendencies in businesses are going to come out of Asia now, largely, or maybe the Middle East. So the Middle East money, I think, is still coming with the sovereign funds and so on. But unfortunately, the Asians, and especially the Japanese, have still not come in big force. Portfolio flows from the West, FDI from Asia and Middle East. I think there will be significant money coming from there.
Now, Hyundai India is all set to drive into Dalal Street today with much fanfare, with about 200 executives of the company to be present here for the listing ceremony. Now, the company's 28,000 crore rupee IPO, India's biggest till date, was fully subscribed after qualified institutional buyers came to the rescue. Sudarshan retraces Hyundai's journey in India, which began nearly 3 decades ago.
In 1986, Hyundai made its US debut with the Excel, praised for its affordability and named Best Product by Fortune magazine. By 1991, Hyundai had developed its own proprietary engine and transmission, achieving technological independence. The 1990s brought further expansion. In 1996, Hyundai entered the Indian market with a state-of-the-art plant in Tamil Nadu. 2 years later, the launch of the Santo revolutionized Indian roads by its unique design and affordability, and it made Hyundai a household name overnight. In 1998, as Kia Motors faced bankruptcy, Hyundai acquired a 51% stake, outbidding Ford. The two companies have since shared ownership of key subsidiaries, and while Hyundai remains Kia's largest stakeholder. In the Indian market, Kia entered in the year 2019 with mid-sized SUV Kia Seltos. In India, Hyundai continued to introduce successful models like the Accent, i10 and i20, cementing its position as the second largest automaker. But it was the company's strategic pivot to SUVs marked by the launch of the Creta in 2015 that truly transformed its fortunes. SUVs now account for 67% of Hyundai's sales. In 2019, Hyundai launched India's first fully electric SUV, the Kona. Electric plans to introduce 4 more EVs in near term, including the much-anticipated Creta EV in Q4 of FY25. Today, with a market share of 14%, Hyundai is positioned to grow alongside an industry projected to expand by 4 to 5% to 6.5% through 2030. Hyundai's production capabilities are also scaling. Its Chennai facility produces 8.20 lakh cars annually, while a newly acquired plant in Maharashtra is expected to add an additional 1.70 lakh cars by FY26 and plans to further expand to 2.50 lakh units. Exports account for 20% of Hyundai's output, serving markets in West Asia and Africa, and providing a natural hedge against domestic market fluctuations. If we talk about overall earnings over the last 2 years, revenue has seen a growth in the range of 25 to 30% and profit has surged more than 50%. Now, after 28 years in India, Hyundai is making its capital market debut. In its IPO, which was a fully OFS issue, the promoter diluted 17.5% of its stake, and though the retail portion wasn't fully subscribed, the IPO was oversubscribed, overall driven by institutional investors. Lastly, about the roadmap. Hyundai India is looking to invest Rs 32,000 crore in India over the next 10 years with just one aim, to regain the lost market share. But globally, Hyundai has warned of an uncertain outlook due to intensifying competition. From a small car repair shop to a global automotive powerhouse, that's the story of Hyundai driving the future.
And to the largest ever Indian IPO as well. Sudarshan, thanks a lot for that journey into Hyundai. All eyes on Hyundai's listing today at 10 a.m. Time for a short break. Up next, cues from the commodity space. Manisha Gupta joins us on the other side. Stay tuned. Welcome back, and Manisha Gupta now joins us with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Harman, thank you for that. Well, I'm looking at gold prices, which are trading very close to its all-time highs that it hit yesterday. So it has been about U.S. election jitters, Israel retaliation against Iran is what the markets are looking at. So all of these factors will continue to support the market. We've had Citi and Bank of America come out with their reports recently, and both banks have reiterated $3,000 an ounce of a target in the next 6 to 12 months. So, well, there is bullishness that can continue in case of gold. The metals also have done quite well. You know, the strong China economic data, the LPR cut, has supported. So you have zinc now trading at a 2-week highs, aluminum prices near a 4-month highs. There has been strong Chinese buying for a couple of these metals as well. You have silver now trading at a 12-year highs as well. This week is going to be important because you have so much economic data coming in, and next week is Japan's general election. And then as you step into November, there's a whole host of economic data, U.S. rate cuts, U.S. presidential elections. So the markets do believe that tangible commodities will do well. So whether it's about precious metals or industrial metals are on a buy category.
Indeed, Manisha, thanks a lot for that update there from the commodity space. On to some national news now. Junior doctors who are protesting against the RG Kar Medical College rape incident across hospitals in Kolkata have called off their 15-day hunger strike after meeting with Chief Minister Mamata Banerjee. Around 17 junior doctors met with the Chief Minister and discussed their demands for over 2 hours. The outcome of the meeting, the doctors say, is not entirely positive. However, they called off the strike following pleas from the public and the rape victims' parents. And as we wrap on this edition of Power Breakfast, we leave you with visuals of Prime Minister Narendra Modi leaving for Russia for the 16th BRICS summit. The Prime Minister is expected to hold bilateral talks with other BRICS leaders. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for today's trade and the grand Hyundai listing.